Okay, Assalamualaikum warahmatullahi ta'ala wabarakatuh and very good afternoon, ladies and gentlemen. So welcome to Forum of Financial Derivatives, September 2000 and 2001 session. So I am Madam Hafizah Sudin as your moderator. So first of all, I would like to thank to all the audience for attending this forum today. So our topic for this afternoon is derivatives market during COVID-19 crisis, right? Today, we are so honored that our panel have spent their time, despite their heritage schedule to share with us on their experience and also opinion, on the current economic situation. So let me introduce, our panel. We have 4 groups, right? So from FCPO, FGLE, right, and FKB3 and also FKLI. FKLI and also SSF, right? So the crisis we witnessed on the financial market this year, right, it came as a surprise and it hit hard and fast on a global scale. So COVID-19 turned out to be black swan event that became a real life stress test for the derivatives industry. So for the first round, for further detail about this topic, I would like to seek an information from each team to briefly explain on the situation of product in the derivatives market. So please welcome, first group, and then we can continue for the next, second, third, and also fourth group. For the first round, discuss details, the selected product, futures product, in the derivatives market. So please. For group 1.
Okay, so can you see the screen?
Yes.
Okay, so firstly, a very good afternoon to our lecturer, Madam Hafizah Sudin, and to my fellow debaters. So today we'll be having a debate session on the commodity derivatives, and we are from Group 1. So before that, let me introduce myself first. I'm Ganesh Ravia.
I'm Uma Shantini here.
I'm Ranjita here.
I'm Kisia here.
Okay, so the derivatives that we have chosen is crude palm oil futures, FCPO. So now I'll pass it to our next team member to explain the performance of FCPO from October 2016 to 2017.
All right, let's get started. So first of all, I would like to highlight the FCPO performance from October 2016 to October 2017 for the period of 1 year. Basically, the movement indicates that for the year 2016, the value of FCPO has shown a significant rise till December 2016. This is due to the fact that in the year 2016, the global demand for Malaysian crude palm oil increased, especially from China and India. And the fact that it is the largest exporter of palm oil to India is actually Malaysia. And as I mentioned, the demand and need for crude palm oil were rapidly growing in their countries for many factors, like festival seasons and the need of palm oil were expected higher in the industries as well. In addition, according to the data from the Malaysian Palm Oil Council, MPOC, Malaysian CPO exports surged to 1.81 million tons at the end of the year 2016. And this was the highest level of the past 5 years of measurement. Besides that, during the starting of the year 2017, the value of FCPO in the January was around 3,230, which shows an increase from December 2016. The production were expected to be higher and the revenue as well, since there were many initiatives and investments were planned throughout the year. For instance, the government has initiated many efforts for the development of crude palm oil, including palm oil marketing programs by the Malaysian Palm Oil Council, MPOC. This plan was implemented in the year 2017 to ensure sustainable demand in various countries. Due to this secondly, Malaysia also plans to diversify into new markets in the associations of Southeast Asian nations, ASEAN, such as Thailand and Philippines, which could make the regions its third largest exports of market of crude palm oil in this education. So this is the indications for the October 2016 till October 2017 for crude palm oil. I'll pass it to the next presenter.
Okay, thank you, Kitya. So now we take a look at the performance of crude palm oil from October 2017 to October 2018, which is for 1 year. So in the fourth quarter of 2017, the market showed a downtrend where the price had decreased, but somehow it managed to take a rise where in the year 2018, there was an incline in January where the price has increased to 2,571 ringgit from 2,490 in February. And this is due to the growth of palm oil exports demand owing to the Lunar New Year and also firmer soybean oil prices in the world market as severe drought in parts of Argentina's oil producing regions is expected to eat production. So the EPO price, CPO price has also increased after the European Union proposed plans to roll out palm oil as a transport fuel in European Union by 2021 in order to halt the rainforest deforestation and also avoid even more biodiversity loss. So in the second quarter of 2018, it is also saw an incline from April to May where the from 2,324 ringgit to 2,427 ringgit, mainly due to the weakened Malaysian ringgits against the US dollar, which typically makes the palm oil cheaper for holder of foreign countries. Foreign currencies. So from this can conclude the performance of FCPO from October 2017 to October 2018 are quite acceptable, but that are also owing to several unstoppable factors such as weather condition, trade war between China and US, and so on, which influenced the FCPO on 2018. So for the next slide, I'll pass it to the next presenter.
Okay, as we all can see, the graph displays the price of crude palm oil from October 2018 to October 2019. As we all can see from the crude palm oil, performance in the last quarter of 2018 has been on the decline from October to November. But however, it has a minor increase in December. Followed by that, in the year 2019, in the first quarter of January, it showed an incline, while from there to March, it has dropped. But their prices have been fluctuated in the following month. In 2019, the FCPO has inclined in January from RM 2,200, which is in the first quarter due to the rising demand in key markets and higher domestic biodiesel blend mandate. Malaysia has mandated the implementation of 10% biodiesel blend B10 and 7% biodiesel blend B7 for the transportation and industrial sectors respectively in phases from December 1, 2018. In the second quarter of 2019, the crude palm oil price saw an uptrend where it recorded RM 1,982 to RM 2,030. In the third quarter of 2019, the crude palm oil was inclined as RM 2019 to RM 2078 from the month of July to September, which showed a great incline. This is owing to the higher US soybean oil prices on the Chicago Board of Trade (CBOT) and China's Dalian Commodity Exchange, which is in a way of giving positive impact to crude palm oil in the competitiveness of global market share. Besides that, in terms of export of palm oil, it was firmer due to price competitiveness against soybean prices, and also the weaker ringgit against the US dollar made palm oil more attractive to the buyers holding foreign currencies in the third quarter of 2019. That's all from me. Next, I'll pass it to my another team member.
Okay, so thank you, Divya. So now I'll explain the FCPO performance from October 2019 to October 2020. So as you can see the chart, the FCPO had an inconsistent trend, slight fluctuations and increase every month. So the highest FCPO price recorded in October 2020 at 3,522 ringgit per ton, and the lowest were recorded at 2,102 ringgit at April 2020. Sorry. So from October 2019 to December 2019, the FCPO recorded in a range between 2,236 ringgit to 2,809 ringgit per ton. However, the CPO production from January 2020 to March 2020 faced a reduction due to the monsoon rain that has caused the fresh fruit bunches FFB harvesting process to be affected. So this resulted in a major decline in the CPO production simultaneously with the FCPO contracts. So the FCPO prices fluctuate even further with the implementation of movement control order MCO in March, has caused a huge labor shortage in the palm oil sector. However, with the new implementation of labor policies by the Malaysian government, FCPO had a steady increase from May onwards after a severe drop in April. So for instance, the Putrajaya a special grant in which the Malaysian government bring in 32,000 foreign workers into the plantation sector to restore the productivity and to allow for a better cost efficiency. So in that, the FCPO contract experienced steady growth after August, in which when Malaysia participated in the palm oil supply and demand conference post-talk, which resulted the FCPO price to rise to 2,807 ringgit in August 2020. So following that, overtight demand of crude palm oil remained stronger in October 2020 due to the Diwali festival in India, resulted FCPO traded as high as 3,552 ringgit per ton. So that's all for me. I'll pass it to the next.
Okay, thank you, Benish. So the chart shows the trend of FCPO from 1st October 2020 to 31st October 2021. So that the current high palm prices has significantly raised production in the second half of 2021. So that it is projected that the palm oil could fill up the gap in the third and fourth quarters of 2020 to cater for the biodiesel production. So from October 2020 to April 2021, the price of crude palm oil increased rapidly, growing from 3,252 ton to 4,408 ton. Although global biodiesel demand may suffer as a result of the restrictions imposed by the COVID-19, the resolve of key palm oil producing countries to retain the biodiesel policy, particularly Indonesia's B30 requirement, until December 2020 remains critical to promoting domestic CPO consumption. So biodiesel will be diverted into the domestic market as a result of the strategy, which contributes to the rise of CPO price. So in comparison to the previous years, the palm oil production in 2021 seems to be favorable. So palm oil prices experienced a rally during the first half of 2021, with the average monthly Malaysian delivered crude palm oil price ranging between the high of 4,570 per ton in May 2021 and a low of 3,749 ton in January 2021. So the dry spell in Q3 of 2021 caused moisture deficit in palm trees that may weigh down palm oil yield in Q2 and Q3 of 2021. So the lack of heavy rain has benefited harvest activities, boosting output during this period. From September to November could feature wetter than normal weather conditions, which will largely favor palm oil growth in the region. So that's all from the round one.
Okay, thank you so much for group one. So can we continue, right, for the next feature, right? For FGLD, Ricky, Kyle, Mervin, Prisha, Monisha, Shamina, and also Ivania.
Okay, can everyone hear me?
Yeah.
Okay.
Yes.
So it's 2:20. Okay. So good afternoon, everyone. My name is Ricky Kyle, and my teammates are Prisha Sivaraj, Tivanya, Sharminam, and Monisha. We'll be presenting about gold futures, FGLD. Okay, I'll be talking about the introductions first. Okay, throughout history, gold has been used as money and as a relative standard for currency equivalents, particular to economic regions or countries. In the second half of the 19th century, many European countries adopted gold standards, although these were temporarily suspended during the financial crisis that accompanied World War I. Gold has played an essential role in the histories of civilizations and worldwide monetary systems due to its physical uniqueness. It represents beauty, prosperity, and power. Why should we invest in gold futures in general? Because it is regulated trading. Trading is regulated by the Securities Commission, Malaysia, so you can trade with confidence in a safe and transparent environment. Next is the management of risk. FGLD can be used by gold jewelers, makers, traders, and dealers to reduce risk and hedge against unfavorable market price movement in the physical market. Okay, I'll be passing it to the next presenter.
So my name is Prisha and I'll be talking about the technical analysis of chart of the gold future price that we analyze as technical analysis to discover patterns and trends. We employ technical indicators such as moving average of price action, support, resistance, and parallel line to analyze the gold future price. We employed 1, 2, 3 patterns, often known as classic pattern, to interpret the patterns. Gold futures have been moving in an average pattern since April 17, 2017, will continue and do so until the end of the year. A support line for the gold futures has been placed around 169 ringgit and 55 cents based on the chart's action. During that year, investors who purchased gold future were able to profit since the price movement of gold future was consistent throughout the year, and the price future did not go below the support. When they entered the market on 31st of January and sold on the 10th of April, the investors made a profit by buying cheap and selling high. Moving forward to the year 2020, the market movement on January 28 indicated a safe entry position for the investors. Because the movement in the area in the parallel line, it indicates the gold future market is active. The best time to enter market is when price break through the resistance line. The price of that movement began in 207.20 cents and ended in 266 ringgit and 80 cents according to the chart, because it was developed based on a higher and lower line. A parallel line shows a safe entry movement for the investors. Investors might earn from the entry market when the parallel line is at 59 ringgit 60 cents and a total of 128.76%. Gold doesn't corrode and can be melted over a common flame, making it easy to work with stamp as a coin, and this is why investing gold is beneficial. For the next fundamental analysis, I'll be passing it to Tivanya.
Thank you, Prisha. Fundamental analysis is the enthusiasm for the monetary and inherent basic specific exchange. The basic examination applied on numerous things, either in speculation or in business. Under this point, the needed investigation is zeroing into a greater degree towards the gold speculation, which is FGLD. On the first spot on the list, the money-related arrangement is one of the elements hidden on the subsidiary unit. This arrangement is being held by the public authority, which can cause the measure of the loan cost of either expand or other way around. In this, gold has been the well-defined advantage of the financial support, regardless of its 0% yield on the grounds, and the change expenses of doing without interest-based resources is low. Second on the rundown is the financial information, which is one more driver of gold cost. Monetary information, for example, microeconomics and macroeconomics, would give effects on the gold. Other than that, the market interest likewise has their influence on the momentum at the gold cost of the gold. Similarly, as with any grade or administration on the lookout while expanding in the quantity. And on the other hand, an oversupply of the decent and administration with a dry or weak interest can push the value lower. This variable was sustained by the information expressed by the World Gold Council, where gold interest during the main portion of 2016 became 15%. Moving on to the other element, which is expansion rate. At this point, when the expansion rate increase, it will influence the buy force of the individuals as well. Sixth on the rundown is the variable of convention standard of cash development, where there is a connection between gold cost and the significant trade rates like the United States dollars, Great Britain pound, and Australian dollars. To wrap up the things, the wide open likewise can impact the gold costs. There is no particular component that is laid under this subject. In any cases, as financial supports, they should remember that the situation of a world can hold a huge number of wide open, can be a decent variable on the gold cost. That's all from me. I'll pass it to the next presenter.
Okay, I'll be presenting on the analysis and result techniques of analysis. Okay, when significant players such as traders, investors, speculators invest in the gold futures market, this element of the study is just as crucial. Technical analysis and fundamental analysis have been explained previously by my group mates. Well, there are actually plenty of variety of analysis methodologies. There are numerous ways that are commonly used to appear on the trading chart, such as Bollinger Bands, simple moving average, which is also known as SMA, moving average convergence divergence, which is known as MACD, Stochastic Relative Strength Index, which is known as RSI, and other some of the most well-known approaches. As part of our approach analysis for this project, we have actually selected Stochastic RSI, which is known as Stochastic Relative Strength Index, which is RSI, and also MACD. So moving average convergence, also known as divergence, is a technical trading indicator that is often used to analyze a company's stock values. The MACD is a trend following momentum indicator that depicts the relationship between two asset price moving averages. The MACD signal, also known as an oscillator, is made up of 3 time series that are computed using past price data. The most common, which is the closing price. For the 2-year period of 2017 and 2018, the MACD shows that the signal lines tend to shift quite a bit. As a result, we saw that the signal and MACD lines often cross below the histogram. Most traders may be able to buy the contract during this time, while the MACD crosses the signal line and sells it. And we also have included the Stochastic Relative Strength Index as the second which is also known as Stoch RSI, in addition to the MACD in our methodology study. This technique has been used to create a range of values between 0 and 1. Depending on the trade chart, it might be anywhere from 0 and 100. Because the values are inside a certain formula, traders may determine if the current RSI value is overbought or oversold during the RSI. And the RSI is used to take advantage of momentum according to theory. We could suggest that having more lines intersect between the histogram would be a very good idea. I shall pass it on to the next presenter, and that's all from me.
Okay, another 3 minutes.
Okay, the interaction of data and analysis, we can see that the price of gold futures in 2017, as well as the stocks on Bursa Malaysia, are once again on the radar of investors, since the price in 2017 has the previous fluctuation tendency. We have chosen the analysis 5 years of gold futures in the technical analysis of gold futures between the years of 2017 and 2021. By the middle of 2017, local gold prices will be significantly influenced by the benchmark because of the Trump's taxes policies. Gold will be supported by lower ringgit in the performance of Bursa Malaysia. February 2017 had a 48-tick rise to RM 174.70 cents per gram. March 2017 saw a 41-tick increase to 174 per gram, while April and May 2017 saw 40-tick increase to 174.50 cents and 175.10 per gram, respectively. Based on the chart, the beginning and the middle of 2018 had been full ups and downs. Due to lack of the purchasing interest for the commodity, gold future contracts on Bursa Malaysia derivatives open untraded according to our analysis. However, gold prices began to rise in November and December, indicating a positive trend. Due to the predicted rise in gold prices, an investor preference for gold over the asset classes in times of extreme volatility, the gold futures market started optimistic in 2019. Gold futures prices are expected to prolong their record-breaking run in 2020. The price of gold has increased by 28% since the start of 2020, owing to the coronavirus pandemic. In the middle of July 2020, the price of gold slightly downturned with a drop of 256 per gram. However, throughout the month, the price of gold continued to rise owing to the danger of COVID-19, which has impacted the global economic and caused individual individuals to be hesitant to spend. Overall, economics and the investor believe that by reducing the danger of the COVID-19 threat, the global economy will recover. Despite the year 2020, gold remains an applying option for 2021. With prices expected to continue positive and rise even further according to the study, it will be preferable to stay put and invest in the gold futures market for the time being.
Okay, that is all from us. Thank you.
Okay, so thank you so much for group FGLD. So now we move to FKLI. Can you please share your PowerPoint slide?
All right. Hello. Can everyone hear me?
Okay. Yes, can.
All right. Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Adlan bin Abu Qasim, and me and my team today will be presenting and will be trying to talk about why FKLI is the better derivatives compared to the other three. I do apologize, Cindy Kushimeng could not be here today, but my other two teammates are Nur Sorfina and Nur Fazil. Now, over the past 2 years, there's been an influx of investors that has come into the investing field with the GameStop phenomenon and the Robinhood scandal and the emergence of cryptocurrency and Elon Musk's Twitter. More and more people are invested in investing. We can see this clearly when Bursa Malaysia said themselves they saw a huge increase. But where this is important for us is there's been a spillover from the stock market and from the investing world in general into the derivatives market. As a matter of fact, if I'm not mistaken, Bursa took out of published a study that said participation rate of derivatives market increased from 25% to 30% in just 2021 itself. As a matter of fact, they did a whole program where they are trying to teach people and trying to get more people involved in the derivatives market. Now, why this is important is because most of the people that enter the market, they have this market is very complex. Yet they choose FKLI. Most, if not all, newcomers choose FKLI and they succeed in FKLI. So that's the catalyst on our report. Why FKLI? That's why we chose FKLI compared to most people. Now I'll talk about a bit about the contract specification. The underlying instrument of FKLI, I think most of you know, is actually the KLCI index. In other words, it's Malaysia stock market. It's derivative of Malaysia stock market. Malaysia stock now, it's a very important distinction. Malaysia stock market is not a macroeconomics, but Malaysia stock market usually in general and most times is a general indicator of Malaysia's health, economically and financially. The settlement method is done by cash, and the speculative position limit, you can long or you can go short for around 10,000 contracts. Usually. All right, I'm going to be passing out to my next member for the technical analysis. Thank you.
Assalamualaikum and a very good afternoon to everyone. My name is Nausafina Jamal Ashkin, and I will be presenting the technical analysis as well as the interpretation of the analysis on FKLI. So we can see from both of the graphs that FKLI was moving in an uptrend at the beginning of the period with some fluctuations in its prices. But then FKLI started moving in a downtrend from August 2018 and throughout most of 2019. And then it eventually fell to the lowest point of 1,211 ringgit and 50 cents on the 19th of March of 2020, which is the day after the movement control orders started being implemented in Malaysia due to the outbreak of COVID-19 in Malaysia. So this shows that FKLI was significantly affected by the sudden enforcement of the movement control order, which caused the FBM KLCI index to drop to its lowest level in 11 years due to the losses in the KLCI linked transportation stocks, and as well as banking stocks, which then increased economic fears. However, FKLI managed to bounce back and recover quite quickly after the decline in its prices. All right, meanwhile, the highest point reached by FKLI after COVID-19 hit Malaysia was recorded on the 11th of December 2020 at 1,684 ringgit and 50 cents. And it was due to the fact that there was a rally in stocks related to banking and financial services as investors were transitioning into recovery play, stimulated by positive sentiments due to vaccine news, which led to an increase in the financial services index, as well as the points of FBM KLCI. However, despite the fluctuations, FKLI has been improving towards the end of the year 2021, which may signify potential growth in its annual rates in the prices in the upcoming years. So next slide. So it is predicted that the FKLI prices will increase in each of the next 5 years, in comparison with the last year in the time frame we selected, which is from the 1st of November 2020 until the 31st of December 2021. So the prices of FKLI may increase specifically due to the expected increase in the prices of KLCI-linked transportation stocks due to the opening of the vaccinated travel lane between Malaysia and Singapore since November 2021. It may also be due to the expected increase in external demand and infrastructure projects by the end of the year 2022. It would also be affected by the reopening of the Malaysian tourism sector in the upcoming years, as well as the improvement in the SDG, or Sustainable Development Goals, focused index in Malaysia's local stock exchange, as well as the increase in the annual growth of Malaysia's oil and gas mainstream market. So that is all from me. I'm gonna pass on the next part to Fazli. Thank you.
Yes, Assalamualaikum and hi everyone. I'm Nur Fadlin Sanusi and I'll be presenting about the fundamental analysis. So the fundamental analysis is typically conducted from a macro to micro level in order to identify the events or any issues that contribute to the price movement of FKLI in the market. In this context, there are a few factors that will be considered and further explained in describing the price movement. The first factor that has a degree of impact towards FKLI's price movement is monetary policy. Malaysia's stock market are seen to be vulnerable, where there are possibility of sudden exchange rate depreciation and capital outflow. Thus, monetary policy is regarded as one of the most significant elements that could tandem with this matter. Although there are a few sound signs claiming that money supply responds negatively towards stock prices, however, most scholars maintain that the relationship holds true only for unexpected changes in money supply caused by the market. Other than that, the movement of the price market index depends on many economic factors, and inflation rate is one of the obvious factors that influence the changes. The inflation rate and stock price had a negative relationship. This is due to the fact that when Malaysian economy is experiencing inflation, the cost of living and the cost of production rise, and then investors do not invest as much as they did before inflation occurred, and vice versa. Apart from that, in terms of gross domestic product, GDP also acts as one of the catalysts for stock prices in Malaysia, to the extent that GDP growth is driven by stock market. According to the statistic derived from the World Bank open data, there's evidence that shows Malaysia's GDP started to decline from 2017 until 2021, and so does the stock market, which also showing downtrend within that period of time. In simpler terms, I can say that Malaysia's stock index is claimed to be positively correlated with GDP. On top of that, another aspect that could impact the FKLI's market index is exchange rate exposure, since exchange rate could influence the activities and performance of companies either locally or internationally. Fluctuations in exchange rate would have a certain degree of power towards the value of foreign currency, which would eventually influence the movement of stock prices. Studies are being executed out, and the result indicates that the price movement is significantly negatively related to exchange rate exposure. However, the relationship is not fixed. Last but not least, for the interest rate, it also has a complicated ripple effect towards KLSE composite futures. The effect of interest rate can be seen when interest rate rise, the value of financial assets respond negatively due to the rise in required rate of return. So that is all from me. Thank you.
Okay, so thank you so much for FKLI. So can we move to next group, SSF? Can you please share your PowerPoint slide, SSF team?
Yes, madam. Yes, madam.
Okay. Assalamualaikum and good evening to Madam and my fellow classmates. My name is Atika and my group consists of Putri, Aida, Sangeet and Shalini. My group's topic is single stock futures, or also known as SSFs. Next slide. Okay. SSF is a type of derivative financial instrument in the form of future contracts that has been used to protect the value of commodities since the 1970s, when the market will slow down and the prices of commodities start to fluctuate. As a result, the traders and investors begin to mitigate the risk of price fluctuation by quickly setting up a fixed price for the commodity value, even if the submission of the respective goods was set in the future. In terms of concept, this contract is viewed as an additional financial instrument to the chosen underlying stock portfolio in the Malaysian financial market that prepares the channel for protecting the stock's value from price changes. Moving on to the next part, I will pass to Putri.
Okay, so now we will be going through the technical analysis to look over the performance of FSF. So technical analysis is an overall financial analysis that identifies trends and makes predictions by using patterns in market data. So the performance of stock single future, or SSF, will be seen by the Genting Berhad that can be seen in screen right now. So on the early of 2017, on 4th January, has recorded a starting price of 7.92, which considered as a good first movement for the year of SSF. The movement of SSF started to increase gradually, showing a consistent uptrend movement until it reached its peak. So during those time period, investors that invest on SSF will be able to actually gain profit as per se the proven consistent movement of SSF mentioned before. Oppositely, on the year of 2019, the SSF had a rocky and unsmooth start as the price movement from 2018 seems to be decreasing even more in the starting of 2019. So for investors who are a risk taker, they might hold during these durations, but if the investors are at risk adverse, they might sell during those days. So nevertheless, despite the low and bearish trends of these price stocks, it gradually started to increase from the 12th February break till it reached 2019 of its peak price, and actually being able to stable its price continually. So as per said just now, despite of the inconsistent and bearish price movement in 2018 and 2019, it can be seen that 2020 started off the year with a bit of increase in its price movement, probably due to the crisis in SSF. So 2020 recorded an absolute bearish trend movement since the price actually break the support line. So however, it is a good time to actually make a new entry, as it will also help in creating new support line, showing a possible entry for stable profit and also for the new investors that just entered the market. So next presenter will be Aida.
Okay.
Aida? Aida, are you there? Aida, are you there? Aida?
Medium?
Yes, yes. Are you there?
Yes, I'm here. Bila dengar aku.
Okay. Okay, can. Aida, don't mute. Aida.
Elok. Bila saya tak mute.
Okay. So now, okay.
Okay, as
Open
Sorry.
your video.
Saya dah buka video, madam.
Yes.
Ada masalah kamera.
Okay, others, can you see, boleh nampak Aida tak? Kalian semua? Or probably my others, can you see Aida?
Tak, madam. Saya rasa dia ada problem.
Okay, pandai, yes.
Okay, sorry. So I represent the data interpretation. So in 2017, as you can see, the future market is showing increase at first beginning of 2017. This is because they have this but you can see there is a slightly downtrend there in the July 2017, where
Aida.
So this hello, madam.
Yes.
Maybe can you hear me, right?
Can. Aida, can you please continue?
Okay, so despite the Plantation Malaysia register that CPO product selling price and higher fresh fruit bunches FFB production, then the revenue was lower as this did not translate entirely into CPO from Sabah. Okay, so moving on to 2018, where there is decreasing and increasing trend, where from future price drop. So the high close price in July 2018 with from RM7.82. So the reason of the price drop was as the share Genting Malaysia and Genting Berhad have tanked to 8 and 10 years low respectively. And then the investor became concerned about the financial impact that Genting faces. So at the end of 2018 has been in bearish where investor or trader buy low for the last 6 months after the announcement from Disney and Fox. The investor might not confident to proceed to invest if the market goes down. So in 2019, where the close price in January and February 2019 are in RM6.94 and RM7.40 respectively. In this way, the investor or trader can future price drop. But since the increased revenue from result would Genting,
Aida.
hello, medium.
Yes. Aida, yes. Continue.
Medium tak dengar tadi.
Can. But your voice sekejap on, sekejap off. Aida, okay.
Okay, so moving on in 2019, the future price dropped in April with RM7.02 and continue to drop more until RM6.40 in May 2019. This show bearish from where the investor will sell the stock high and buy at the low prices since the stock are declining in value. But at the end of 2019, the chart shows a slight increase showing that bullish market. So in 2020, based on the SSF, it indicates rapid drop from January to March 2020. So this shows bearish market since the stocks are still declining. The growth of SSF, single stock future price start at the end of March 2020 with RM3.72. But at the end, they continues to drop until 2020. So the Genting regained some lost ground following the initial shock, which is experienced in March 2020, when the stock dived to a low at RM1.83. So according to Bloomberg statistic, where 13 of 18 analysts recommend Genting to buy for which can gain until 18%.
Okay, another 3 minutes here.
Okay, so moving on to for year 2021, the chart pattern started with the bullish market where the stock increased in value with open RM4 and close price with RM4.50. In February 2021, the price increased at RM4.32, where the market increased due to information over the launch of the Skyworks outdoor theme park, where Genting must be carefully timing to open the theme park. Consider we have Malaysia will return into lockdown if the new variant come into the picture. That's all.
So is it done? Your group, Atika, Putri Batisha, and also Aida. But suppose here you should have Sangeet and also Shalini, right? Sangeet, Kau, and also Shalini. Okay, so class, everybody, my dear brothers and sisters, we are done for the first round, right? The performance on your selected futures. So now we move to now we move to second round. So they are pro and cons for investors to benefit from the investment in the derivatives industry. Even market cope well with record volumes and volatile markets. So this crisis has tested our limits, and we have discovered that those limits are further out than we would have thought. So everybody, in your opinion, as a new investor or trader, do you think this is a good time to trade in the derivatives market, and which product is sustained and less influence on the COVID cases in the market? So I open the floor for the 30 minutes, right? So anybody can give opinion, right? So I will consider the points, right? It's like the debate session, right? Among all these 4 groups. So who wants to start first? So can we start with FGLD?
Hi, madam. Yes, we can start, but I would like to pass it to Monisha as it's...
Okay.
Yeah. Monisha, the floor is yours.
Okay, thank you, Ricky. I can say the FGLD is one of the best in this recent time. For the generation, gold futures on the Malaysian Derivative Exchange have been regarded as a very precious commodity, and the price of gold futures is closely tracked in the financial markets throughout the world. Gold futures in Malaysian ringgit are instruments traded on Bursa Malaysia derivatives that provides market players exposure to worldwide gold price fluctuations. It is most usually priced in US dollars, while in the Malaysian Derivative Exchange.
Okay. So anyone?
Sorry, yeah, I would also like to add on that despite the year 2020, gold remains an appealing option for 2021, with prices expected to continue to be positive and rise even further. according to the study that we have conducted, it will be preferable to stay put and invest in gold futures for the time being, as like we showed just now in our charts, that in 2021, it has showed a significant, what do you call that? Increase, yes. So yeah, that's all from us.
Okay, others, you want to counter, you want to argue?
Yeah, I do have something to say in regards to the method of saying why gold is going to increase. Now, if I heard one of you say just now, I think one of you said the moving average indicated that gold is going to be rising. Am I correct?
Yes, you are correct.
All right, I have a huge problem with that. Here's the thing. When it comes to COVID times, moving averages have been proven to be way less effective than it is. Well, if during normal times, let's say 5 years back, yes, moving average is quite useful. I've used moving average myself. It's quite a useful instrument to indicate whether you should buy or sell. But here's the thing, it's much more applicable towards stock markets rather than futures markets.
I would disagree.
And especially during COVID times, there's actually been a study, if I'm not mistaken, Adam Khoo, one of the best investors in Singapore, he says moving average usually will get you a return of 20% a year. But there's been a study done, I think by UKM. It says that during COVID times, people who use moving average get a return of 0.88%. That is below even fixed deposit or ASB if you're Bumi Putra. So in my opinion, using moving average, it's not a good indicator, especially during these times.
Okay, others, please.
I would like to counter back. Prisha, the floor is yours.
So based on a finding by Mr. Vicky McKeever, investor fear levels are particularly high right now as the coronavirus pandemic turned the global health crisis into an economic one. As it's uncertain when the world will recover from either these crises, compared to an investment in stocks, where the biggest blue chip companies can fail, an investment in gold appears to be seems less risky, said Adam Witter's market analysis from an investment platform. I hope I answered you.
So others?
Hurry up,
class. Yes, Pandai.
Right. So despite from all the points given there, I would like to say that single stock futures is also like we can always trade in single stock futures, because in single stock futures we can short trade. When trading is the regular stock market, we cannot short trade over there in most of the cases. But with stock futures, we actually can short trade or trade long without any issues. Actually, this provides us with more flexibility and allows us to take advantage of all the downswings in the market. Instead of only having one way to make money, now we will have more options in making money. That's all.
I would like to comment on that because I completely agree with what she said. You know, compared to commodities, commodities derivatives is very difficult to short, and that takes away half of the power as an investor. However, I do have a problem with the SSF actually. SSF, if I'm not mistaken, you presented that you were looking at Genting stocks, if I'm not mistaken.
Yes.
Yeah, I have to ask, why not just invest directly into the stocks? Because as far as I'm concerned, I actually have invested in Genting and I profited around 20%, but recently they dropped back to 4 ringgit and I put more money into it. Because Genting for me has a high potential of success rate when it comes to the stock, but for the stocks, not for the futures. The futures, as I'm not mistaken, has been underperforming quite bad. But the actual Genting stocks, even within the investors field, is actually quite a popular stock to invest in. So for me, it doesn't make sense to invest in the futures when the stock itself is way more appealing.
Others, hurry up. FCPO, why keep silent? FCPO, you want to counter back?
Madam, sorry, I would like, since we are talking about FCPO, I have a question for FCPO. Okay, if I'm not mistaken, during your slide presentation, you said that FCPO has a consistent trend when you showed us, how can you say FCPO has a consistent trend when the slide that you show us during 2019 to 2020 showed us that it declined during monsoon rain, if I'm not mistaken. Is that right, FCPO?
From 2019 to 2020.
Yes.
Okay, so
So
I
I
will
would
come
like
to
to
back.
ask you, what is the guarantee that with monsoon rain that it wouldn't be affected further, since our climate isn't consistent at all at the time being, and you are saying that it's going to consistently increase in the near future?
Okay, so I'll counter back to the question you asked, Master Raki. Okay, so the monsoon season is okay, so basically our oil palm sectors are mainly based from the east regions and the west regions of Malaysia. So the monsoon reasons over there will be from November to December, especially from between October to December. So we see a significant drop in December to February. And after that, we see a significant increase after the implementation of MCO, when the government of Malaysia has implemented a new employees policy for the foreign laborers, which has overcome the labor issues. So from then, we have seen an increase in the labor demand, which has contributed for higher CPO production as well.
I would like to add on the point as well. In my point of view, I would say that crude palm oil does have huge demand in the future. And I'm right now focusing on the future because, as we're well aware, the current industrial revolution is actually increasing after the pandemic, right? Due to this, many economic activities are regaining from the losses from the COVID-19. And I would say that crude palm oil is one of them because, in my point of view, well, when we see the palm oil usage, it can be classified into many elements. First of all, in demands. So first, it is used for the cooking purposes, and apart from cooking purposes, it is also used in many industries like the cosmetic industries, cleaning products, hair care, soaps, and as well as personal care. And I would say that these examples have clearly supported that crude palm oil does help these subsectors closely. And as an investor, investing our money in a potential product which will help the subsectors to grow of the part of other sectors in industries as well. But definitely we will be profitable, and at the same time, I would say safe as well.
So others? So, right, so from FKLI, only Adlan, how about Fazlin and also Sofina? You want to add some points? So what's your argument?
Yes, I would like to.
Okay, pandai Sofina. Okay.
Something about FCPO. So you said that it's going to be there's going to be like an expected increase in the coming years, but then actually since the start of this year, the plantation sector, which can also affect FCPO in a way, which is also measured by the Kuala Lumpur Plantation Index, it has actually been underperforming since the starting of this year by 8.4%. So how do you ensure sustainability and like the profit sustainability of the traders if you say that FCPO is actually a good derivative to invest in, because it has been showing inconsistent sustainability and has been also been very volatile from 5 years ago actually until this year?
Okay, so I'll counter back to the question asked by Nasipina. Okay, so FCPO is, in my opinion, it's one of the best derivatives for investment. So basically, based on the current market outlook, CPO has a higher demand among the global consumers for cooking products or manufacturing products such as cosmetics, soaps, packaged foods, shampoos, and many more. So as a result of higher demand, basically the export of CPO has been facing a significant increase over the past few months. Most probably in the Asia Pacific region. So compared to the soybean oil, which have been currently having a lower demand market. So according to the Malaysian Palm Oil Board, MPOB stated that higher strong CPO exports have resulted FCPO to be traded higher by the speculators in the market. So for instance, in October 2021, FCPO was traded as high as 5,400 ringgit per contract, which was the highest FCPO were recorded in 2021. So the CPO exports were also increased from 723,000 tons to 798,000 tons in 2021. So we can say that there's a huge potential in the growth of our palm oil industry. So that it'll be a profitable investment if we invest in FCPO. Yeah.
All right,
Right,
Danish,
like-
before I counter back, I would like to ask you a few questions first. When you say invest in FCPO, do you mean long-term or short-term?
Okay, so based on our prediction analysis, okay, I will explain in terms of short-term.
Short-term.
So, yeah, short-term. So in terms of short-term, based on the recent article released by the MPOB, stated that the major exports of crude palm oil, such as China and India, are piling up their food stocks, as there were, in case of immediate or emergency lockdowns, will be implemented due to the current Omicron virus has been spreading vigorously. So that will how to say potential growth in the FCPO in short term, whereby the price will able to increase up to 5,800 per contract in the first quarter of 2022. Yeah.
Yeah, here's the thing. It already happened, in my opinion. The huge burst of where the price comes up, it already happened when the globally, internationally, everyone started opening up. So for me right now, you're just jumping into a trend that's already died out. As if you can see, recently, it was a great idea to jump on FCPO when we were starting to opening up. Right now, everything is starting to go down back. And if, let's say, for short term and short term, let's say the COVID goes away, everything will go back to normal. The FCPO will go back to a steady rate. Let's say if MCO, that will still affect FCPO. And for the long term, I know you did not say long term, but for me, FCPO is bad for both short term and long term. Long term wise, crude palm oil will not dominate the international market. EU already banned palm oil in 2018. And Americans are looking into banning palm oil from their country because of environmental reasons and also some accusation about how we are having slaves or whatnot. I don't want to get into the midst of that argument. What I'm saying is, from a future point of view, palm oil is not sustainable, both as in an economical stand of view and environmental stand of view. Internationally, it will phase out.
I'd like
I
to
would
add
like to.
what Dan has said. So basically, one of the large capitalized plantation stocks in Malaysia includes the Genting plantations Berhad stocks. All right, and it has been facing a decline too in recent times. So other like 3 large plantation companies like Batu Kawan Berhad and IDM Plantations Berhad are also included, but then these companies, they are not like taken into consideration because Batu Kawan Berhad actually owns 47% of Kuala Lumpur Kepung Berhad, which is also another plantation company. So the share prices of all these companies have been distorted by the takeover offers. So as these plantation companies are also can be significantly affected by the commodity sector, and the commodity sector is not going to like, I don't think there is like a potential for it to grow any further. Maybe that there is like a small growth rate, but then it's not going to be like a significant one in the upcoming years because of the factors that can influence it, because it can be easily affected by the external factors outside of the market.
I would like to defend this point, first of all. In my point of view, I would say that Malaysia is one of the world's leading producers of palm oil. And one of our major countries that we are contributing is actually to China and India, and which states the largest populations as well. And as well as, I would like to highlight here the future predictions of this industry as well. So in my point of view, I would say that Malaysian crude palm oil productions or demand in terms of trading is expected to increase after the December 2021. And this is estimated from the rise from the January 22. And for instance, these predictions was made by the government authorities and as well as the agencies whose respectively by diminishing crude palm oil productions. And I would say that if you're going to talk about the decline in the demand of crude palm oil, let me take a look at globally. The pandemic has impacted many industries and as well as crude palm oil. But then we tend to focus on the industries contribute to many industry subsectors as well. So I would definitely say that in terms of usage, the crude palm oil does have a potential in the futures and as well as sustainability. I would like to add others to add on.
So I would like to head to Kitya's point. Yes, the pandemic has caused damage to the current market. But when we look in the future, it will eventually going to have a good pickup. The market is somehow start to recover from the damage that pandemic has done. For example, higher demand from China, India pushed up the crude palm oil export in September 2021 by 36.8% month on month to 1.60 million metric tons from 1.17 million metric tons in the previous month. So moving forward, the team with MIDF, Amana Investment Bank Berhad, foresee higher export from India in October due to Diwali festival, which is on 4th November 2021. So in top of that, other factors such as removal of restrictions on import of refined palm oil until the end of December, which is also helped to boost the export demand from India. So this comes as palm oil inventories in Malaysia shrank more than expected last month as production slipped from a 10-month high level and exports saw a strong rebound, boosted by an increase in demand from all major consuming countries. So this clearly shows that the demand for FCPO is rising. Thus, it have to say that one of the things that the pandemic has underscored more than anything else is that the investment market is a forward-looking mechanism.
Divya, you want to add something?
Okay, I would like to add on. There are few aspects to be considered on why an investor should trade in FCPO. So the first would be immediate market exposure. So the global fund managers and commodity trading advisors and proprietary traders can gain immediate exposure to the active crude palm oil via FCPO. Other than that, it also has the take advantage of both bull and bear markets. So in FCPO, it provides retail investors with a structured product to access the crude palm oil market. Buy low and sell high for a bullish outlook on the movement of crude palm oil prices and vice versa for a bearish outlook. And I will also add on with leverage trading. Gain leverage trading exposure to the notional value of the underlying asset with a relatively small amount of capital, initial margin, magnifying the effect of a given change in price. And I would like to conclude with risk management. Plantation companies, refineries, exporters, and millers can use FCPO to manage risk and hedge against the risk of unfavorable price movement in physical market.
Okay, so I would like to add to Divya's points also.
Okay.
So oil palm is one of the most profitable commercial high-tech crops and has undergone one of the highest rate of expansion. And its main use is as a coconut cooking oil and an ingredient in domestic products such as processed foods, detergents, cosmetics, as well as biodiesel. So as such, global demand for palm oil is growing rapidly, but the crop originated in West Africa much of its industrial expansion under monocrop plantation systems such as occurred in Southeast Asia. So palm oil has a variety of uses. Its traditional use has been as coconut oil, but it is now used as a food additive and as industrial lubricant as well as in the production of various cosmetic ingredients. So because of a high demand for palm oil, and the palm oil industry will likely remain an important economic driver for the Malaysian and Indonesian economies. So furthermore, palm oil has great potential as a source of biofood. So the advantage of palm oil, especially in terms of productivity, volume, price, and versatility, explain its success in world markets. So as this is from my point of view.
So FGLD, another commodity futures. Your argument? Can I open to FGLD before kita proceed dengan SSF?
Argument. Okay. Like I would like to also say that, like I said, the price. How to say? the price of the, oh, wait, give me a second.
So probably Monisa, Shamina,
Yes. Can someone please?
Ivania, right? Because Rikia, kamu dah you already give your opinion dah ada, right? So probably we can open to other group members, right? Ricky, kamu sabar, you done your part. So can I have from Shamina, Ivania? You want to add something? Prisha, Monisa. Yes. Okay, Fazlin. So Fazlin. Okay,
so I have something to say about FGLD.
Okay, Fazlin.
If we compare among all those features, FGLD has the least effect, the global current issue. FGLD has the least effect from the global current issue, and why is there still why FGLD still has the lowest trading volume among other futures?
Okay. So FGLD, Shamina, Ivania, you want to add something? We have another 12 minutes here. So if no, probably we can open to SSF.
Okay, hi, madam.
Yes, Panda Shani.
Okay, I would like to add my point on why we should invest in SSF. So as we know that most of the individuals are actually affected by COVID-19 pandemic. So I think that they can use this opportunity to make themselves involved in the investment market. So as we can see, SSF is a derived, it is derived from 10 underlying stocks from the individual stocks. So for example, we have Genting, Gamuda, Harta Lega, and CIMB, for example. So one of the things that actually helps them is that it costs a low capital requirement. So for example, when let's say if we invest in Harta Lega, it is from a normal stock. If the share price is 6 ringgit for one stock, if let's say we buy for 1,000 shares, it's going to cost us for 6,000. But when we trade in SSF, we just need to pay 250, which is the initial margin. So which means that one contract which is equivalent to 1,000 shares. So we don't need to go to the stock for 1,000. Instead, we can just go in a shorter way. Besides that, I feel that we can also invest in SSF because one of the advantage of getting involved in these single stock futures is that we can use the leverage process. If you are trading in the stock market, you can actually trade with 1-to-1 ratio. But with single stock futures, you can actually get the leverage as much higher that we can without in trading in the futures contract, to gain more profits and minimal movement for the underlying stocks.
So Divya, is that you want to add something? Divya, kamu nak cakap apa-apa ke tadi?
Yeah,
Right.
sorry. I realized that the SSF group was talking about initial margin. So as far as I know, the SSF contract, there is the risk of losing significantly more than the initial investment, which is the margin deposit. So what do you guys think about it?
Okay, I'll counter back to the first question. So, okay, in terms of like losing the margin and stuff like that. Okay, so considering the time period that we're living right now, and the circumstances that we face, like COVID-19 and stuff, so the pandemic risk that encounters all the market stock right now is undeniable. So I'm first going to talk about the undeniable factors, that the pandemic risk, where it actually highlighted that triggers the most intense and significant outbreak that affects the whole financial markets. So in pandemic situation, just like the other stocks as well, owners of stocks started to sell their shares with the consistent decreasing of price movement. So when actually SSF seems to be more affected due to the low volume of participants in the market as a whole. So as our fellow debaters are well aware, SSF is considered to be quite the uncommon market stocks, as it is new and has a lot of disadvantages compared to the other existing market stocks. So due to the low participant in market itself, adding up to the circumstances of facing COVID-19, the trading of SSF appears to be very much lower, and that's why, as Divya said, there seems to be like a lower in the return of margin, right, Divya? Right. Yeah, okay. So that's why, and the pandemic risk actually makes it much worse because people actually started to fall out from their tradings in market, and also because due to the fear of profit losing. However, if you trade in SSF, in some cases, one may be actually able to save money on commission because stockbrokers will charge either a flat fee or a percentage on the trade. So this could potentially save the investors or traders some money and make the trading more profitable despite of the risks that are going on around. Thank you.
Okay, Atika and also Aida, you want to add some points, right, to defend your SSF?
Okay, I just have a short explanation.
Okay, understand.
It's just a short advantage. Okay, so in my opinion, I feel like investing in SSF is quite relevant because we can profit from both bull and bear markets. We can sell short SSF quickly and easily with less hassle. Than borrowing shares and no uptick rule to deal with. So in my opinion, short sales using SSF are more efficient. That is all from me.
Aida, you want to add something? Aida? So if not Aida, okay, Divya, you want to add something? Divya,
Okay.
you want to say something?
As much as Atika talked about the advantage of SSF, I'm pretty sure that SSF would not be a good investment because SSF accounts are marked to the mark every business day. So there might be a possibility that the brokerage firm might issue a margin call, which will require investor to decide whether deposit additional funds or to quickly close the position. So yeah, I think SSF would not be a good investment.
Okay.
Okay.
Can I?
Okay. Yeah. Okay. Can.
Okay. Yeah. Just to defend from my point of view, like for FGLD. Okay, gold stock opportunities. Basically, the values of gold stocks are usually partially reflected by the price movements of the precious metal, which is gold. However, gold stocks can actually maintain their profitability even when the price of gold is low. So I believe that this is definitely one of the best place to be invested. Additionally, many gold mining companies pay strong dividends, which can help provide further incentive for investors to buy gold stocks instead of gold. Yeah, that will be my point of view to defend FGLD.
Okay, I will argue the point.
Okay. Ivania, yes.
Okay,
Divya,
Divya,
kamu pandai sekejap. Okay, Ivania. Okay. Divya,
adding to Sharminam's point, gold is a tangible source of wealth creation during this current pandemic. Gold emerged as a major asset class during this current crisis. Its performance was fairly stable during these two waves of pandemics, which made of a lot of new investors hope onto the gold, considering things are like very much uncertain with regard of the coronavirus and the global economic is still healing. Investing in gold is a safe path towards wealth creation. What makes a gold investment more profitable is the transparency that comes within it. Yeah, that's all.
So adding on to that, gold is an excellent choice of investment for many reasons. It can be used as hedge against inflation and will always be a value of due to scarcity. Investors can diversify their portfolio by investing in gold, in addition to other investment in equity, fixed income, and unit trusts. Adding into portfolio diversification, a balanced portfolio will often include diversification assets like gold, as they are commonly negative correlated to the stock market. Having a diverse investment portfolio helps to reduce risk and volatility for investors. So that's all from me.
So,
I would
can
like
I
to
have, okay, Monisa, okay, can.
So I would like to
Sorry,
add
Monisa.
the point for the gold one, Miss. So the gold one, we can say that safe haven, which is like, unlike currencies, gold is not directly impacted by interest rate decisions and cannot be printed to control its supply and demand. Gold is a scarce asset that has maintained its value over time and has proven its worth to act as an insurance policy during adverse economic events. Because of this, gold is considered a safe haven by many investors. That's all
Okay,
for me.
Divya. Okay, pandai. So Divya, you want to add something?
Yeah, so I realized in FGLD, they experienced a downtrend in 2020, if I'm not mistaken, because the individuals were hesitant to spend. So I'm just curious that how would they convince their individuals to
I would like
spend
to counter back.
into FGLD in upcoming years? Yeah.
Just by you saying that individuals were hesitant to spend during 2020 on gold is already a major fault or major wrong statement. Because as you know, we were given ICINA. Do you remember ICINA? And what the individuals of Malaysia do? They went and invested in gold. So I would like to say that the price of gold did go down, but due to the increase of people investing in gold, it did increase back. So I would like to also add on that the price of gold has increased 28% since the start of 2020. And regardless of the pandemic or not, people were investing in gold. And I would also like to say that the price of gold is driven by fear. You have to know that people are investing in gold because they want to invest in something. They aren't going to invest in FCPO because it's not driven by fear. Sorry.
Yeah, but but last week, the price of gold actually declined by 2.9%. And it has been declining from the previous weeks, from the past weeks, as the emergence of the Omicron variant takes place from Africa and to the whole world. So what can you say about that?
I would like to say that based on like the end of 2018, it was at its lowest peak. And because of the COVID pandemic, it did increase significantly. And yes, it has been declining, but would you say that it's like a total loss? I wouldn't say that, because we do have uptrends and downtrends in investing, but I wouldn't say that you completely lost your investment by investing in gold.
Yeah, I do agree with you, Ricky. But the point is it's been increasing a bit too much. You know, if you zoom out when it comes to gold, this is the highest peak gold has ever had. It has never had an uptrend this high. The question is, when is it going to end? There's been signs of going down, and when a price goes down, it doesn't just drop immediately. It goes down, up a bit, down, up a bit, down, up a bit. And this week it went down and now it's going up a bit. If you were to say invest dulu, yeah. But right now, I wouldn't say it's a good investment.
Yeah, but I would say that if you invested 2 years ago, or maybe during the pandemic, you would already made a huge what do you call that, lump sum of cash. Yeah,
of course lah. I also can say right now, if I invested in Tesla, Bitcoin, I'd be rich right now. Now it's what to invest now, not 2 years ago.
I would say that you could still invest in gold, because regardless whether it's going down or not, it's just going down a little bit and it's still going up. But if you compare to other derivatives, it didn't do as good as how FGLD did during the COVID pandemic. And if if there is another MCO, if there is another pandemic, I'm telling you that gold will go back up. Thank you. Bye.
Okay. Any points? So can we go to the conclusion? Because now it's 3:31, right? It's already 30 minutes, yeah, debate presentation. Subhanallah, very good debate. So come class, right? So for the next round, so thank you so much, Ricky. Okay, so come class, right? I would like, yeah, each team to conclude the discussion for today. So probably the group representative, yeah, your last word to defend your selected futures, right? And then conclude our debate presentation today. Yeah, can we start with FGLD first, Ricky first. After this, we go to Adlan, and then we go to Atika, and then the last one will be the FCPO, Ganesh probably, right? Okay, to conclude this discussion. Okay, go, Ricky.
I can say that I can support as a FGLD is one of the monetary standard role in the economy of 19th and 20th centuries, or is one of the most well-known roles for which it is remembered. Based on the analysis we shown in the previous slide, a parallel line according to the technical analysis provide a safe entry movement for the investor for the year on the chart because it was established based on a higher high and higher low line. Investing in emerging market might provide profits. When it comes to the investment, a gold investor should treat gold as if it were any other commodity. Gold is a good kind of insurance against a global financial meltdown. Individuals who own gold, on the other hand, will be able to get such insurance.
Okay, as for the recommendation, ma'am, okay, I will just say that today's future exchanges are those whose risk appetite has straddled the fine line between aggressive risk-taking and prudent risk management on occasion. There is no assurance that your next managerial decision won't be a bit too hazardous. Trading gold futures is ironic since a future is a derivative asset formed nearly entirely of credit. Because speculators abound in the commodities market, any significant shift in the gold price is likely to be a mirror of financial turbulence elsewhere. In other words, a fast dropping market can demand selling, further lowering the price, while a rapidly rising market can compel purchase, further raising the price, and either scenario has the potential to cause a runaway cycle. This is tolerable for extremely long periods of time, but it is an inherent risk of the future system. As markets begin to fall, this fostered forced selling, which resulted in eventual financial disaster. In good times, this structure just increases volatility. In less favorable times, it might lead to structural failure. When a market openness is compromised, the investor should inform that there are problems. If a market can impose fees that are opaque and difficult to grasp, the advantage shifts to experts who are intelligent enough to see through the fog, and the futures market clearly qualifies in this sense.
Okay.
Thank you.
Okay, thank you so much for FGLD group. So can we move to SSF? Sofina, Adlan, and also Fazli. So probably one of you, yeah, you want to conclude to the presentation.
FKLI, madam, not SSF.
Yeah, I madam. Sorry, subhanallah. FKLI, subhanallah, sorry. Okay.
Each of us will say something, but I'll keep mine short. The end of the day, derivatives is you betting on something. Right now, you either bet on gold, palm oil, a single stock, or you bet on against the whole country. If I had my money, I would bet with my own country. And the good thing about FKLI, you can bet against or with the country. That's all.
Yeah, I would say that the main advantage of trading FKLI is that it allows traders to perform short selling, which means that they're allowed to sell the derivative first and buy it later to close out their trading positions. So this means that FKLI traders can hedge the exposure of their existing market portfolio and also reduce the market exposure of the portfolio. But this is not possible with the commodity derivatives like FCPO and FGLD. And commodity derivatives like FGLD and FCPO are also more risky to invest in, as they have a higher coefficient of variation value. which means that they are more likely to face more significant price swings, and which makes them more volatile. But as the SSF team mentioned just now, the SSF traders of SSF can also perform short selling, but it is also risky to trade SSF since the leverage involved in SSF trading makes the impacts of price changes bigger, which may lead to huge losses once the market moves in the opposite direction of the traders of SSF. So an abrupt change in the prices of SSF may bring about like a margin call where investors are required to send more money. So if these traders of SSF don't actually maintain or sustain their margin balances, their SSF positions may face like a huge loss at the end of the closing price period. So that is why FKLI is the better equity derivative. Thank you.
I would like to add some more points regarding the short selling aspects. So like we find meaningful returns can be derived from shorting stocks in FKLI. And shorting in FKLI Malaysia is far more safer because the probability of Malaysia's stock market crashing compared to one company is far lower. And then although FKLI has been like greatly impacted from the global pandemic, even so, the market has powered fueled by expectation of a period of strong growth after vaccines are widely distributed and the economy fully reopens, in which it is showing a good momentum, unlike the other futures, which like tend to play around at the same level. So that is why it is best to invest in FKLI.
Okay, so for SSF and also FCCO, conclusion?
Okay, so I'll conclude in behalf of
Yes.
So as a conclusion, so in the current pandemic time, most of the speculators are experiencing a huge loss of the investment. However, FCPO speculators are experiencing a fruitful profit in the past few months. So based on the current trend and future predictions on the FCPO, it is highly recommended for the speculators to use FCPO as a hedging strategy on the underlying assets to avoid potential risk and losses from unfavorable price changes, as there's a huge potential growth on the palm oil industry in the upcoming years compared with other derivatives in the futures market. And there also no strong correlation was found between the ongoing pandemic towards the FCPO prices, which seems unstable with the current market condition as the pandemic is still going on. So the CPO will experience a higher demand from India and China and European Union in the upcoming months by 39% compared to 2021. So as India might cut down their import duties on the palm oil and shifting the imports from Indonesian crude palm oil to Malaysian crude palm oil. And the weaker ringgit also supported higher prices and the commodity more attractive to the potential buyers. Therefore, there's a huge potential growth in the FCPO, and it's highly recommended for the speculators to invest in FCPO.
Okay, so thank you so much, Danish. So you want to add something? Sorry. Yeah. Can.
So I would like to add on my point as well. So I would definitely say that investing in crude palm oil sector will definitely bring profit for many parties. I would say that crude palm oil industry helps uplift millions life of people, for example, in terms of uplifting the poverty countries. And as well as I would say that oil palm plantation have created millions of well-paying jobs as well. For example, we tend to see that it has uplifted the smallholders firms, and as well as it has helped many farmers to own their very own land. And I would definitely say that Malaysia is one of the largest producers of palm oil. And as an investor, I would definitely say that investing our money in a well-performing sector like FCPO will definitely guarantee a better returns in the future for many parties.
Okay, so thank you. So for FCPO, so now we move to the last SSF. Divya, you want to add something ke? Divya? Tak ada. Okay, SSF.
Okay.
Divya want to.
Yeah, Divya, you want to say something, Divya? Sekejap ya, Shalini. Divya, why? Lag ke?
Yes.
Okay, lag. Okay, tak apalah. Shalini, you can proceed.
Okay, madam. So I will just say a short summary. So in the in summary, future trading at the single stock level using high frequency data and comparing the behavior of underlying stock during intervals when there is future trading with intervals when there is no future trading does not collaborate the results found by the early studies, which have concentrated on lower frequency data and applied a pre-post futures trading investigation. The market volatility in the cash market did not decrease as a result of the operation of the futures market. As we can see from the technical analysis shown, it was developed based on moving average of price actions such as support, resistance, and parallel line. A good profit was made in the year 2017. In the year 2017, the market movement entered to a safe position, enabling the investors to gain great profit. This indicates that the single stock market is an active market. The best time to enter the market is when the price breaks through the resistance line. Unfortunately, in the year 2020, single stock futures recorded a bearish trend movement since the price break in the support line. However, in the year 2021, it was a good time for all the investors to invest and gain profit in the coming next years. Overall, in the year 2021, it is a very suitable for any current and new or current investors to invest since the time is safe in order to join or sell their stocks. I'll pass it on to Sangeet.
Right. Hi, madam. I'll be talking about the overall for SSF. So investors of SSF must therefore understand and be aware of the risk in trading in single stock futures, and they should always assess whether SSF is suitable or not. Investors are also encouraged to consult a broker or a financial advisor in the respect of suitability for stock futures trading in the light of investors' financial positions. There are some recommendations that can be used to invest in this investment. The first one will be monitor the positions, because trading SSF sometimes can be risky, so we will need to check the positions regularly as a part of our risk management strategy. And apart from collecting initial margin as a form of collateral, our broker will also revalue our SSF portfolio at the end of each business based on settlement prices determined by the Bursa Malaysia. So that's all from us. Thank you.
So thank you, Sia, so much for Team A debate presentation. Ricky, can you please stop the recording?